Hey everyone, welcome back to my channel. I am very excited for today's topic. I am going to be going over something that, in my opinion, is a very good opportunity, and it's a very good time to get in on it now because of the coronavirus and the worldwide pandemic that we're experiencing. Our economy has taken a downfall before it rises up again. I am today going to be discussing the stock market and the various things that involve trading and selling on the stock market. One of the biggest things that I would personally say to anyone interested in delving into this world is to first and foremost do your research. Do your own research, do your own independent research before even delving into the markets, right? Try to find an app that you like the most or that is highly recommended by other people, or try to find websites or articles that will explain to you even further what the stock market is and how it works. If you still have more questions, or feel free to leave them in the comments and I'll answer them to the best of my knowledge, or I will redirect you to more information. One thing I also want to mention before I even start talking about this stuff is the fact that I in no way know whether these stocks are going to go up, the ones that I'm going to recommend anyways. Or I don't want anybody to claim that I am predicting or giving you advice that leads you to lose money, because I have no idea. The truth about the stock exchange is that nobody really knows what's going to happen unless you have insider information, right? Part of the reasoning behind that is because the stock market is kind of like a casino where people are basically just gambling and throwing bets at a product or a share. And the more you gamble and the better you get at it, you might make more money. And obviously, if you have more capital, you can make a lot more money faster. I would say start with the brands that maybe you yourself already consume and use, and move away from those slowly by slowly. The more time you spend looking and observing and researching different stocks and companies that are traded in the stock market, you are going to start gaining so much information that it's only going to become easier and easier the more you do it, much like anything else in life. First and foremost, I want to answer those questions that might be on people's minds that have never heard anything about the stock market or don't know anything about it. Sure, maybe oh yeah, people buy and sell and trade shares, but in reality it's a lot deeper than that. There's a lot more analytical things that you could do, as well as more research oriented trades that can be made that will be beneficial to you. So I want to start us off by first sharing, so what is a stock, right? What is a stock? A stock is basically a share of a company that decided to go public, right? Let's say a company was privately owned before, but they needed to gain more money. They needed investors to come and give them capital. Capital equals money. It's the same thing. When a company goes from private to public, they're basically offering any ordinary person to come and become partial owner, right? You go in, you buy some shares, and suddenly you're involved with the company, right? Essentially, you become part owner of that company. That is essentially what is going on when you buy a stock or a share. That's why more or less people like to buy shares of companies that they already recognize or that they already have some personal attachment to, whether it is a company you use often like Amazon or eBay or PayPal. However, you do not necessarily get any say on what happens with the company because you don't have enough equity. A large enough percentage of the company. Maybe one day you buy enough shares and you do own a large percentage of the company, then by all means try to buy the whole thing. The biggest advice I want to give everybody who's starting out is simply put in a little bit of money at a time, whether it's $50 a week or every couple of days, and start from there. Start investing in smaller stocks that might be priced a little bit lower, and then move towards doing larger stocks. There's a lot of different variations in stocks. For example, penny stocks are obviously sold and traded for a penny or less, sometimes a couple of cents. Those are the types of stocks that you could see a large gain in a short period of time because a stock could skyrocket, or you could see nothing happen with those at all. Sometimes they stay very low and they never really rise. But that's for another time. Blue chip stocks are stocks from companies that are pretty much guaranteed to go up. Stocks like Walmart, Amazon, Apple, Netflix, Tesla. These are all very known companies that will most likely, they will always be on an upward trajectory because of the fact that they are known, and the fact that mainstream audiences all around the world have heard of this brand, and they can rely on the brand to be, always delivering on the best. I guess you could say that they're always delivering the best that they can. Another thing I want to bring up is some words that are oftentimes used when describing the stock market or even just discussing it. Open is obviously when the market opens, and close is when the market closes. High and low is the highest price that the stock was at for that day, and low is the lowest that it was for that day. Volume means quantity. So let's say you want to buy 10 shares, that's your volume. So the next thing I want to discuss is bull and bear markets. So a bull market basically means that the whole market is on an upward trajectory. It's just constantly going up. It doesn't stop. And a bear market is the exact opposite. So when you're in a bear market, people always say to buy, and when you're in a bull market, you usually want to sell. And most of the time, you don't actually want to sell everything you have. Your portfolio should consist of a lot of different types of, global economic spheres, as far as like different industries or different companies. You don't necessarily just want to put all your chips in one basket. But more on that in a second. When a particular stock is going up, let's say the whole market is kind of bear, but there's one stock that is going just skyrocketing, that stock would be called bullish. And let's say the opposite is happening, where everything is going up, but then there's one stock that's going down. That stock would be bearish because it's not doing good, right? So that's just simple terminology that you might see or might run into while trading on the stock market. So how do you start trading? It's a very good question. I would recommend first and foremost downloading apps like Robinhood, Cash App, or even Webull. Cash App is a little limited on the stocks and the trades that they can make because of the fact that they're so new, but Webull and Robinhood have been around for a little bit longer and are usually a little bit more legit when it comes to trading online. I recommend using Webull as it is the best option in my eyes. There's a couple reasons why I don't recommend Robinhood as much anymore, but Webull is the current best stock trading app in my eyes. So the reason I say that is because it allows you to see graphs and tick by tick trading, which is honestly something I haven't seen in any other app, which is great. So you would download the app, connect your information, and once that's happening, you can make a deposit and then you can start trading. One of my biggest recommendations, like I said before, is to start small and then invest more and more over time. You don't necessarily want to push everything at once, and you don't want to put too much money in at once because there's the possibility of a higher loss margin. And it's free. All of these apps are free. So before I get into the stocks that I recommend and the reason why I recommend them, I just want to say that the stock market trading is very new to me. I used to do it back in 2017, and I had about $300-400 in. And then I think I lost about $100. And then I was like, you know what? I'm out. I don't want to lose money. And also I was in a different place in my life to where I didn't necessarily I couldn't just freely invest that money without having to take it out right away, which is something that I've learned is you don't want to do. You don't necessarily want to put money in just to take it out moments later. This money is intended to be, it's intended to be held inside. You want to leave it in the market. You want to leave it for a long time, as long as possible, really, because at the end of the day, this game is about holding on to what you have and only selling if things start to drop immensely, or, buying if things start to rise slowly, or immensely as well, which I will go into in a second. One of the things I do want to clarify is that when I jumped back in, I started using Cash App because personally it was a lot easier for me to use. The interface on that is very simple, but the problem is they don't necessarily have all of the stocks that are available on the market right now, and so they're very limited in their trading options, as well as some of the ETFs that are available right now in the market. Cash App is very limited to that kind of stuff. What is an ETF? ETFs are exchange traded funds, or an easier way of putting it is basically it's a bundle of stocks. So you would have a transportation stock that would include both Uber and Lyft, maybe a couple airlines. Maybe there's a hotel ETF that includes all of the different types of hotels around the United States, and stuff like that. So that's one of the bigger things that I haven't necessarily delved into. I haven't gone and looked into ETFs too much, but my roommate knows a lot more information about that stuff. And he's the one that recommended I should start looking into ETFs. So maybe that'll be the next thing I do. Another thing I just want to talk about and clarify is the fact that the market is always going to change, right? And it's good to know when that market is going to be changing. So for that reason, I just wanted to point out the market hours, right? In New York, the New York stock market is open from 9:30 a.m. to 4 p.m. This gives you roughly about 6.5 hours to make your trades while the market is open, whether that is buying or selling or holding. I also want to point out the fact that there are pre and after markets, but we're not necessarily going to talk about this today because that's a lot more. You're delving in deeper into this world, and if you're not necessarily already inside, maybe that's not something you're prepared to know about just yet. People who live in Los Angeles, in case you were too lazy to do the math, 6:30 to 1 p.m. is your time to trade. Personally, I've been getting up a lot earlier just to be up when the market opens. My biggest recommendation for anybody starting out is to wake up when the market is open, especially if you want to be involved in trading, because most of the time stocks are going to go up right as the market's open because everybody's like trying to buy, right? And so most stocks will go up. But you'll notice that most of the time, immediately after that rise, unless it's just a good day for that stock, most stocks will go down immediately right after. So you'll see a momentary gain when the market opens, and then it'll stabilize within the first hour. That's why I tell people, at least this is what I've lived and what I've experienced. I'll wake up for that first hour, and then if I feel like the stocks are not necessarily doing big rises or falls, I'll just go back to sleep. And then I'll wake up 2-3 hours later and then check again. Obviously, if you do not wish to leave so much risk in the air, stay up, right? I run my portfolio a little different. And like I said, my portfolio is not necessarily going to reflect what your portfolio looks like or what exactly it is that you're investing in. So keep that in mind. Another thing that I would like to point out is the fact that dividends is something that a company will give away or give out to their shareholders over a period of time. One of the biggest things I would recommend doing is looking at the company you're about to invest in and see if they give out dividends, whether that's a yearly dividend or a monthly dividend or a quarterly dividend, whatever it may be. Look into it so that you can see, and there's a whole process for that, which I can go into in another video. One of the things that I want to point out before I get into this last bit is just don't be afraid to take a risk. Don't be afraid to put in $20 on a stock that you think might go up the next morning, or a stock that you think, has a lot of potential, because who knows, the next day it could rise a lot, or the next day, it could be major gains. And so I want to remove any misconceptions with trading on the stock market because of the fact that it's not difficult unless you make it difficult for yourself. And you only make it difficult for yourself if you're not thinking with your head and not observing data, and you're just blindly buying or selling because you just feel like you should. Don't do that. Do research. This whole thing is about research. It's all about it. If you're not researching the companies that you're investing in, what are you doing, right? Why are you investing in those companies if you don't know whether they're going to go up or not? That's the biggest takeaway. What the great part is about those apps that I mentioned before is the fact that most of them are going to have articles linked to the bottom of each of the stocks that you're going to buy, right? It'll have articles about the company. It'll tell you when their earnings report are coming out, if it's close. All of that information is available to you at the bottom usually. If not, go and do independent research and find what's going on with that company before investing. So this next part is going to be about my suggestions for different stocks that you might want to look into, or at least maybe think about investing if that's truly where you are in your process. These are stocks that I noticed were high up, very high up, in the months of January, February, prior to this March dip that we saw. Really past February 20th and on, we saw the dip, very sharp decline in the stock market to about March 18th, which was really, really tough for our economy. But it's a great opportunity now. That's the thing. It was tough, but it's a great opportunity now, because you'll notice that I'm going to tell you about stocks that were pretty much leveled the whole time and then took this giant drop and now are going and slowly rising back up, right? So before I get into these numbers and the different stocks that I want you to watch, I'm going, and these are long-term watches. This isn't short-term. This isn't day trading, which I didn't even go into, because really day trading is only going to benefit you if you have a lot of capital or you're just very, very smart and are watching the markets almost the whole time that they're open, right? Which serves a purpose if you're trying to make fast, quick cash, right? Which I've done before, day trading, and you can day trade and find a lot of success. I'm not saying you won't, but I'm saying it's a little bit more advanced than long-term holding on to stocks, okay? So some of the stocks I want to talk about first and foremost is the ones that I've been recommending to pretty much everyone, which are the airlines. Right now, pretty much all the airlines are low because of the fact that nobody's really traveling, right? At least that's what they say, because I was just traveling back from Texas and that plane back from Dallas to LA was full. It was completely full, like 3 people per row, completely full. And that was American Airlines. And maybe the airport wasn't as full as it could have been, but I know for a fact people are still traveling. But this is, once again, long term. I'm not talking about short term. I'm talking about long term. So I want to point to you this and what I am calling the PTC prior to COVID or coronavirus, prior to coronavirus or prior to corona, whatever you want to call it. But PTC. So that PTC for these airlines, I'm going to read to you, and then I'm going to tell you the current price. And I want you to see the difference between those prices. Now, the PTC is something that I saw from those last couple of days before it dropped, right? And I'm looking at a median number because it could have fluctuated by $1 or $2 from the price that I'm going to give you, whether it be up or down. But this is the median, as in at one point it hit that number between those last couple of days in February, right? And maybe it was consistently like that for the last 2 or 3 months, and it hadn't necessarily gone up or down from that number, but it's very high, and it's almost like a guarantee that those things will return to that once the economy opens back up and is flourishing. I don't know. When I say guarantee, once again, I'm saying this for myself, as in I invested in these stocks because I see them as a guarantee. I'm giving you this advice and this information because I think that they could be guarantees, but once again, don't quote me or say, hey, I lost money, or hey, this was the wrong choice, because I have no idea. Once again, we're all gambling here. So, without further ado, first and foremost, Delta. So at PTC, Delta was at $55 to $60. Let's say $57. They were at $57, right? Now their current price from last Friday was $24.12. So the market closed with Delta being at $24.12. The highest we saw them around February 15th to 20th was between $55 to $60, right? So let's say 57, like I was saying. That's a pretty good gain over time, right? Let me show you the other ones. American Airlines, PTC, was $30. Their current price is $10.64. United, PTC, $80.60. Their current price, $26.62. That's a huge margin. United is definitely one that I'm like, that's crazy that it drops so much, because that could be like $50 if you get in on it. And imagine owning like 4 shares, $200, 6 shares, $300, 8 shares, $400, and so on, you know? So Southwest Airlines PTC was $55, current price $29.23. So that one, you know, smaller gains, but there will be gains. That's what I'm saying. You have to look for the ones that are going to give you the biggest return on your investment. That's all that matters. The stock market is all about gaining money, winning, being in the bullish markets, buying those bullish stocks so that you make money. That's all we're worried about. Long term. Spirit Airlines, PTC, $43. Current price, $13.17. Let's say you get in on Spirit Airlines, right, at the current price, $13.17, right? And once again, the interesting thing about this, and I want to point this out for anybody who watches this video after these dates and once this market fluctuates, and maybe this information is not going to be as useful to you if you don't watch it right when this video drops, but those high prices, those PTCs, the prior to COVID, prior to Corona, those prices are probably not going to come back until this whole disaster is over, right? So whether that's in 2 months, whether that's in 3 months, 4 months, that should show you how long you're going to be holding on to this money and why it is an investment and not something that you're going to be pulling out right away or anytime soon. So if you do watch this video and you're watching it and these times have passed, the price has gone up, well, I wish you would have gotten to me sooner, and I wish you would have subscribed sooner, because I'm going to be giving you tips like this about stocks and other information on the regular. So make sure to subscribe. Discover is a credit card company, and I have Discover, right? They were down to like $35, right? I saw them. They went back up, but before coronavirus, prior to COVID, they were at $75. And when they closed on Friday, they were at $41.37. Now, that is a huge margin for that as well, because you're almost guaranteed to see that go back up to where it was, mainly because it's a credit card company and a lot of people use them right now because they're not necessarily charging on interest for some people and not charging late fees because of the coronavirus. Their stock has gone down. So once all of that stuff is back to normal and people are paying their bills, you will see an influx in these markets. Next, I want to point out Hertz and Dave & Buster's. Now, the reason I point these two out to you is because Hertz, prior to COVID, was at $20, right? Now, as in Friday, well, it closed at $3.51. That's the current price, $3.51, when it was normally $20. Now, why is that? Why is that such a decline in that service, right? What I want to point out to you, and this is the biggest tip I want to give you, is that when you're looking for stocks right now, when you're looking at stocks, look for the ones that were normally people-oriented, right? Where people drive that market, right? Airlines, right? Car services, car rental services, hotels, right? Dave & Buster's, like I said. Prior to coronavirus, Dave & Buster's was at $45, and yesterday they closed at $13.33. $13.33, normally $45. That's a huge gain, once again. Lastly, I want to point out these last four cruise lines. Cruise lines are huge. Carnival, Royal Caribbean, Norwegian cruise lines. First of all, Carnival, PTC, $42. Current price, $13.93. Royal Caribbean Cruises, PTC, $115. Current price, $40.77. Norwegian Cruise Lines, PTC, $53. Current price, $13.84. Do you guys see the pattern? Do you guys see? And once again, you don't just have to just take my word for it. If you go and find these airlines or you find these stocks in their markets, you're going to see that they're all, look, trust me, if you go and you look for these stocks on the stock exchange market, you're going to see what I'm talking about. There was pretty much a steady, price that was there, and then it dropped. And now it's slowly going back up. And now's the time to invest. Now's the time to get in, because maybe you don't necessarily see a skyrocket in your prices, but let's say in 2 months, everything's back to normal. Coronavirus is ended. There's no more pandemic. People are trading and going out and everything's normal again. These stocks will return to their normal success rate because of the fact that, once again, they were already there on a normal market. So now that we're in a pandemic market, we're seeing a lot of drop. We're seeing a lot of decline. But once we return to a normal market, which we will, you're going to see that rise and that success for all these stocks. So last one I want to point out is El Dorado Resorts. And once again, these are just leads. This is just for you to go look for these, but also look for things in similar industries. Like I said, people-oriented industries are down right now because most people are not involving themselves in those industries because we can't, right? El Dorado Resorts, PTC, $68. Current price, $18.84. What I'm getting at, time and time again, which I've mentioned, is just these are long-term holds, because once again, I want to get you to understand that the whole market is about holding on to what you have, right? Buy shares of companies and then hold on to them, because in 2 or 3 months, we're going to see these things skyrocket back up. So if you can put in money to have one share even, you could be seeing $50, $30, $20 worth of growth in a matter of months, right? And that's why a lot more people put a little bit more money over time, because, well, if you're going to be making $50 off one share, why not get two, right? So you'll start developing that type of mentality. And once again, I want to be cautious and tell people to play at your own risk, right? Because like I said, it is a bit of a gamble. Nobody knows where the market is going to go. Nobody really knows if the market's going to go up or down. Sure, you can do analytical research and understand it better, but in reality, as soon as that market opens, sure, the price might go up or it might go down. Nobody is really sure until that market opens. So once again, pay attention to those times that the market is open. Start trading small, and I hope that you win and you gain, and I hope that it's a success for you. And I hope that I've helped you with just understanding it a little bit more, as well as these suggestions that I gave you. I hope they helped you and that you're able to understand the market a little bit better. Please like this video if it helped you in any way. Subscribe to the channel for future updates on stocks and other informational videos that I will be making from this desk. I just wanted to give a quick shout out to all of you for watching and tuning in to this video. I hope that you've enjoyed yourself. I really very much enjoyed myself, and I very much enjoyed sharing this time with you. I'm hoping to have the links to a couple of those apps at the bottom with a referral code. I know I don't make any money off of YouTube yet, so it'll be really helpful. I get a free stock, you get a free stock. It's a win-win situation, and I'll take it as my fee for giving you those awesome leads and some great information. So thank you so much for tuning in. Stay curious, everyone, and I'll catch you in the next one. The things you want to look for, first of all, is the New York stock market, right? The New York stock market is open from 6:30 a.m. to 1 to shit. Okay. 6:30, I did it wrong. Okay.